Hi, Tim Biggam back again for Traders Exclusive, and again to use my kind of song lines that I like to blend into the market conditions. I think to quote the talking heads, we're on the road to nowhere here. I think the market is just about right, somewhere around the 1600 level on the S&Ps. Certainly we had a decent sell-off, the most vicious one we've seen in a while of, 5% off the highs. That was met with some decent buying. We see the VIX coming down around that 16 level. That's probably the level 15 to 16. That's just about right. I think with stocks looking to make, somewhere around $110, $112, with a 15 multiple, that puts us somewhere, right around here. The Fed, I think the tapering tantrum that we saw, probably has come to an end for the time being because, it's almost show me, not the money. Where they keep kind of jawboning, but keep providing that monthly sort of stimulus. So I think the Fed is really worried more about the fact that the market may have gotten ahead of itself and was trying to contain that rather than actually pulling that monthly stimulus off the table. They've already let out the July POMO, and certainly August will be coming out shortly here. So I don't look really for the Fed to be laying off the gas pedal anytime soon here. Economic numbers mixed at best. Friday we have the big jobs number, which I think will be somewhat of a non-event here, and certainly it's a number that has become viewed with a lot of skepticism, to say the least here, where you see job growth slowing but the rate coming down simply by participants falling out. So if you take a look from when the financial crisis started until now, we've actually lost jobs, not gained. So job growth anemic, GDP anemic, growth fairly anemic, yet the market struggling to grind higher here just based on there's nowhere else to go. Although we saw a big move up in the bond yields, I think they're probably just about right as well. So I'm really looking for kind of that long, kind of cruel summer here where everything is probably about where it should be, in my opinion. So how do you make money in this environment? Use option strategies. I think selling both sides of the market here, using rallies like we've seen over the past couple of days to sell out of the money call spreads about one standard deviation out. On a monthly basis, that would put you about 4.5% out of the money here, using the VIX as our position kind of management tool. And then on sell-offs, use the same sort of strategy, about one standard deviation out on a monthly basis, somewhere probably around that 4.5, maybe a little bit more if the VIX pops up. And, selling 5-point spreads, bringing in about 60-cent credit on either side, and just looking really for the market to remain range-bound over the summer here. Otherwise, we see a stock like Apple, which, if you want the poster child for a double bottom, take a look at that chart at 390. We saw that come off the bottom big time on Friday, along with gold. And if you take a look at gold and Apple, they somewhat have been trading, almost perversely in unison here. So I kind of like gold, selling out of the money put spreads there, and also Apple, that 390 level, certainly looking out in August and September. I'm positioning by selling out of the money put spreads there. And GLD using that 115 level, 115, seems to have held nicely. So again, looking down the road, August, September, selling the 115 strike, buying the 110 on Apple, selling that 390 put, buying the 380 put, about a 10-point wide spread there. So I think not much happening here for the next couple months. Earnings season will be coming out, but given the fact that we've had the most negative guidance from last quarter that we've seen, in quite a long time, I'm not looking for any big upside surprises in earnings. And with the Fed still, pretty much saying we're going to keep, the free money parade going here, I really see the market buffered to the upside by, valuation concerns. If they take it too high, given earnings, it, might be a time to take some profits, and to the downside by that free money. So I'm still looking for big range, no change, selling out of the money spreads on the indices, and then looking at stocks like Apple and GLD to position to be a buyer on dips, if not collect some decent premium. So until next week, this is Tim Biggam. As always, keep your position sizes in place and make sure those risk controls are there. Take care.